To give us an update on politics and economics. Good afternoon, good evening, Nick.
Good evening and good afternoon. How are you?
I'm fine, thank you. Fine, thanks. An update, first of all, before we move forward onto Europe. What's happening in the States?
In the States,
we've been following the Trump and Biden inauguration last week, and I'd like to see what's going on right now.
Well, actually, I'm going to focus on, because it leads nicely to the markets and the economics, I'm going to focus on the idea that we have a stimulus coming. It looks at the moment like Biden and his team are going to go for reconciliation and not go bipartisan. That's the initial noises. One hopes otherwise, but we'll see. If that's the case, then we're going to get a fairly large stimulus, around $1 trillion, maybe a bit more, in short order. And what that is doing is basically you're seeing stimulus increase. And remember, down the line, we're going to have an infrastructure bill at some point, which will also require the method of reconciliation. And so you're seeing stimulus come in now. You've got future stimulus coming later down the road this year, probably. And this is all just as the vaccines impact should be picking up, as well as states that have been very closed down in terms of lockdown, starting to open up because of needs. Rates of infection seem to be going down. So you'll remember this, Leah. I think we're stoking up the sort of potential increase in economic activity that will remind people of the Roaring '20s again. Mm-hmm. So I'm sitting here looking at, I'm very positive commodities because of supply chain shocks, but I'm also looking at the stock market. I'm nervous of the stock market, but I'm not out of the stock market. I would follow it up and manage my risk accordingly. I think the big risk that we have right now, and this could be, I don't think this feeds through to the economy so much, because I think the Fed will be late to the game, is inflation.
Okay, Nick, can I just interrupt you? I'm with the Honorable Dr. Jason Azzopardi. He's going to pose some questions to you.
I have a couple of questions, Nick. Leah was telling me about your distinguished background in banking and investment banking. I would like to take this opportunity to pose two quick questions. Number one, I was reading in the Washington Post earlier this week that the predictions from the Central Budget Office of the US government is for the pre-pandemic employment levels in the US to be reached again. It will take us it will take the US a good 10 years. Is that realistic? Is that indeed the case? Second quick question, do you envisage inflation to come out of hibernation post-COVID?
That's my preferred question, the second one, but let's start with the unemployment first. It depends what people define as full employment, of course. We never got there even prior to COVID. Obviously, the employment level, those that have suffered most are the ones that are predominantly in the gig economy, hospitality primarily. And I'm actually I think we're going to have there's money out there, and I've been talking to people looking at investing in just that. So maybe we will be surprised at how quickly that part of the economy turns back. My one concern, and this will lead into the inflation side of the second question, is I look for inflation to be cost push, and I think that's primarily occurring because of supply shock as opposed to demand shock. And the supply, you're seeing freight rates in the west coast of the US, in Europe, in China, screaming higher. There's a lot of anecdotal as well as hard evidence that supply chains are really problematic, and that will create that inflation push. So I look for inflation. Also, we have crude oil and energy that will rebase. If you recall, April last year, you had negative oil prices.
Yeah.
Well, that's going to rebase, and that rebasing process is going to feed through for the rest of the year post-April. I think we have a situation. My fear about things is the Fed, Federal Reserve Bank, ECB, people want to let inflation run hot for the economy to return to normal, which would include employment. And employment is something. Remember Janet Yellen, the new U.S. Treasury Secretary? Her original background is a labor economist. And she's very focused on getting unemployment down as fast as possible. So my concern in terms of the markets is as inflation starts to show its claw, and I think it will come in greater than expectations are showing now, and we're seeing forward inflation rates certainly beginning to discount, and you had an inflation figure that surprised on the upside in Europe today. I think there's that transition period between inflation suddenly getting hot and the Federal Reserve starting to react to it. And that will create the bond markets, particularly at the long end, to sell off, thus giving us higher rates at the long end. Yeah. And that will be a problem that will have to be dealt with as it feeds through to risk assets such as equity. So I do see inflation rising.
Thank you, Nick. We're always short of time. Just very briefly, I saw your notes on Italian politics, just very briefly to round us off today.
Yeah. Okay, so I think Mario Draghi is almost a certain deal. People are focusing on, well, he needs either 5-star or Lega to vote to approve his government. Actually, that's not the case. You can have a situation, as long as he gets a net positive yes vote, you can have a situation where abstentions are greater than the combined yes-no vote, but abstentions are not counted. So I think there's enough there for Draghi to come in. And the key point that nobody's talking about is that a new government under Draghi has to last beyond August the 2nd. If it does that, then there will be no election until the new president is elected by 2 chambers, which is the Senate and the Camera, as they call it, which is February, March next year. I'm not sure it will solve Italy's problems because they've been building up over decades, but Europe loves Mario Draghi and certainly the concept of Mario Draghi being the Prime Minister.
Thank you. Thank you very much for tonight.
Very interesting.
Thank you.
Thank you, Jason.
Hope to see you soon. Bye-bye.
Absolutely. Bye.
Good night.
That was really, really interesting. What an insight.
Yes, he's got many insights.
What an insight. It's amazing. Especially
covers every part of the world.
The part he was explaining about inflation, because I was reading these past few days, and several economists, there was an article in the Times of Malta the other day, but even the Financial Times, the main worry is post-COVID about inflation, and that's something that will eat into the wages of workers, of employees. So it's already a big headache, a source of suffering. Many employees have seen and are seeing their income levels go down due to COVID. And then post-COVID, when one would want to breathe a sigh of relief, if inflation rears its head, and I mentioned this subject precisely this morning with the German Workers' Union, we aired some thoughts about this. But Nick was mentioning the gig economy. That's another important and fascinating, maybe a mindful at the same time, daunting challenge we have as a society.
Yes.
What is the gig economy? What is the platform economy? Many of us are seeing all these motorcycles in our roads with food deliveries. That's the platform economy, where basically you are employed by a platform, technically. And they have no rights, and they are employed as self-employed. They are registered as self-employed, which is a dichotomy, which is a